Hey, good morning, everyone. Corey Schrader, Black Creek Wealth Management. Hope everyone's doing well this morning and having a wonderful summer so far. Just wanted to take a little bit of some time today to run you through a little bit of what happened last week and talk a little bit about what we're going to see going on this week, because it's going to be a crazy, crazy volatile week, especially when you look at what happened last week. We had some numbers that came in a little bit higher than expected. CPI, Consumer Price Index, which is basically just a basket of goods, came in pretty high at about 8.6%. So much higher than people thought. They thought that inflation actually was peaking and now it's starting to come down, but it didn't. It actually stayed pretty high. It was at 8.5, went down to 8.2. Now it's back up to 8.6. So, caused a little bit of some concern just across the overall markets that, this transitory inflation is just not transitory at all, meaning short-lived. So what we have going on last week is with that number that came out showing that inflation is more persistent. Interest rates started going up a little bit again, which then resulted in the S&P being down about 5% last week. NASDAQ, which is most of your technology companies, was down almost 6% at 5.6, and the Dow was down almost 5% last week. So it was extremely volatile, or just moving all around. So one of the things I want to show you today is a little bit of what we're looking at going into this week, where the levels are and what you can do just to take a look at your specific situation to see, okay, is it time to start getting a little more defensive? And if we do, what does that actually look like? Because again, I'm going to challenge everyone here. Don't try to time the market. It's just not possible. Usually your best days come right after your worst days. And if you looked at the market this morning, market's already poised to be down, and using the stock market of SPY is already poised to be down about 2% at the open. So that would be 3 consecutive days of right around 1.5 to 2.5% moves, which is, definitely not something we want to deal with. But as we look at what's going on, let me go ahead and share my screen here, and let's take a look at what's going on. So one of the big things I was talking about for this week is the Fed is actually reporting what they're going to do with interest rates this week, which already creates a pretty volatile type environment. And not only that, we have producer prices coming out. And ultimately what that tells us is whether or not inflation is being passed on to the consumer or not. And at least from profit margins and looking at how our business is doing, they've been trying to keep as much of that price movement away from the consumer, because they do want to make sure that it doesn't affect their bottom line, but they're going to have to start eating some of it, because people are going to get to the point, I know we are, where it just does not make sense to buy some of the things that are out there. We're going to shift from more of a wants to more of a needs based. So, I may want that, but it's just the prices are just getting out of control. So if we take a look at the chart here, this is the S&P 500 just on a weekly basis. As you can see, this is what's been going on over the last 3 years. This was COVID, that steep drop came right back. And then now we're looking at a gradual decline in the actual S&P 500, which is, again, the top 500 companies here in the United States. So when we look at what's going on right now, we can see this is volatility. This is up and down. And these are more of your volatility indicators, because there's a huge range of prices. Okay, huge range of prices. This was started high, closed low, was down about 5, almost 6% in total. Ended the week down 5, but overall there was a huge move to the north and south. That just means that a lot of money movement, a lot of just uncertainty on where should the price actually be. I mean, you're talking about a range of, from it opened at 414 and closed at 389. So a pretty big move, about 26 points, 27 points. So that's again about a 5% move. So when you look at what's going on, what is today? What does this week look like, right? Is it going to be more of the same? Is it going to, go down and then bounce back up? It's all really just going to depend. And it's just going to depend on what is the economic indicator saying. Is consumers slowing down? From how I'm positioning my clients, I'm looking at it from the lens of a longer term perspective. And again, For each individual investor, there's many different ways you want to look at this, but the main one is when do you actually need the funds? If you're a short-term investor, 1 to 2 years, S&P might not be the best place to be right now, because if you start here and it ends here and you need that money to buy a car, or maybe you're looking at a down payment on a house, whatever it is, there's greater concern that it could continue to drift. I mean, it could go up. That'd be great, but we want to make sure you at least have the money you started today, right? So if you're a very short time period and you're looking at, hey, what are those options? Give me a call. Call me, email me, blackcreekwm@gmail.com, and I'll help you out with that. But everyone's situation is very different. So if you have a 5+ time horizon or 10 years, it's going to dictate how much money you actually put towards something in a growth mindset like the S&P 500. So right now, and this is a trend line that I've drawn over the last 5 years, my belief is that we're going to continue to trend a little bit lower. And one of the things that you can do is you can start looking at, and I'm going to talk about this in one of my other videos, there's a couple of strategies you can look at. You can start getting into more of dividend type stocks, because they're more value, where they have a dividend that consistently pays, helps buoy or insulate the prices. You could do covered calls. That's something that I constantly do, and I highly recommend, especially right now. And I want you to take a look at my covered calls video, because that is something that is absolutely outperforming right now. And it's a strategy that I do. So definitely need to take a look at that. But if you look over the last time period, there's a little bit of a trend going on. And again, this is just what I see. And I do believe that we will test probably this next level. If I remember correctly, it's like 3650. I think our next range is going to be 3,500 to 3,650, and we're at about 3,800 right now. So looking at about another 1, 2, even possibly 5%. So if you're 100% in the S&P 500, you'll feel 100% of the S&P. I've started shifting a lot of my clients over to more of a dividend type position. An HDV is a really good one, where again, you're still in the stock market, you're still taking advantage of equities because you're going to need them for inflation, but you do have that dividend that people run to when they are concerned about just the overall growth of the economy, which is what's going on right now. So some things you can do, again, look at it from a defensive perspective. There's nothing wrong with taking a little bit of some growth off the table at this point. Yes, it could go back up. I do believe that there's definitely more of a momentum right now towards the downside. Again, you watch any sort of news, and it's, sell, it's, there's no silver lining. I don't believe that this market has been exhausted yet. And what I mean by that is I don't think everyone's just thrown in the towel yet. I think with the inflation numbers last week, it just gives a little bit more fuel to the fire that says, hey, maybe we are going to go a little bit lower. So the key thing is when you still look at over a 5-year time horizon and take this into account, right? The market is absolutely higher than where it was 5 years ago. The market is absolutely higher than where it was 3 years ago. We're basically removing about 1 year's worth of gains at this point. And again, this is where it was about a year ago. Okay. So it's a little bit of reset because we've had extremely low interest rates, which means that's really favorable when it comes to businesses, just basically putting more things out there. And you had a lot of money that was just given to us because of, hey, the economy's shutting down. We want to really make sure that everyone is flush with cash. So there's been a lot of money out there chasing few goods. And again, COVID has a direct relation to this because supply chains slowed down. So now, as what happened with Target and some of these other inventory people or inventory businesses, is they bought too much. They thought, oh, we're going to have this, for whatever reason, we're going to have all these people buy more couches and more goods, right? Well, we're still a service-based economy. So now people are moving from goods back to services. And now these businesses are holding a ton of inventory that they're going to have to write down, which is wonderful for us because we're going to be able to get things at a much lower price when they finally throw up their hands and say, well, no one's buying it, we got to drop prices. So prices are going to correct. Prices are going to come down. the key thing, and again, stay positive. Don't let the news or the neighbor next door who's down 50, 60% because they didn't have a strategy in place. Don't let the news get you sideways at this point. If you're lost and you don't know what to do, call me. This is not a time to sit on your hands, because you need to know what you're doing and you need to know how you're invested. So call me, 904-240-2930. Black Creek BlackCreekWM@gmail.com. Go to my website, BlackCreekWM.com. Again, whatever you need, I'm here for you. Do not run from this. You got to make sure that you're positioned the right way, because it's not like it was back in 2008 where they're throwing money at the economy. It's not like it was at COVID. They're not throwing money at the economy. If anything, it's drying up. And you want to make sure that you're positioned the right way. If you are near, at, or in retirement, please give me a call if you don't have a plan, especially right now. If you are taking a hit in one of these balance funds or in one of these asset manager funds that some of these brokerage houses or even these fund managers are running, you make sure that it is in line with your standard of living. Make sure it's in line with what you're trying to accomplish, because you do not want to see your account drop, because you will not wait it out. You will not wait to see it come back. If your account is down 15, 20, 25% in retirement, you will sell and you will wait for things to get better. Well, when you're not bringing in income, it's very, very difficult. You got to have a plan. So enough about that. What I would tell you is make sure you check out my trading for the week if you are looking at trading ideas from a long-term investor's perspective. Again, if you're over 5-10 years, this is going to pass. This will happen. If you have money that you've had on the sideline that you're looking at a good time to buy, start doing what's called DCA, or dollar cost averaging. Let's say you have a 10 grand you want to put in, take a quarter of it, $2,500, dump it into the market right now. If you're a growth investor and you're just wanting to just buy something SPY, dump $2,500 in now. If it drops again, do it again. Put it on a quarterly cadence. Take the emotion out of it, and you will be happy as the markets and as times pass. This will come back, and you will be able to benefit from it. Now, if you're 20 years old and you have a 40-year time horizon, just start dumping money in. Now, don't be foolhardy, but start looking at some options. Again, if you need help, give me a call. If you're in retirement and you don't know what to get into, or you don't know how to protect what you have, again, call me, let me know. But again, God bless. Have a wonderful day. Thanks for tuning in. Corey Schrader, Black Creek Wealth Management. Have a great day.